Okay, let's dive right into this. Welcome to today's Explainer, where we're going to unpack one of the most dramatic, totally whiplash-inducing stories in recent crypto history. We're talking about the massive 2026 comeback and the immediate, terrifying crisis of Zcash. Now, if you've been following the privacy coin space at all, you know Zcash has had a wild ride. But 2026, yeah, it took things to an entirely new level, blending some absolutely massive regulatory wins with a software bug that was, well, straight out of a nightmare. To make sense of all this, here's a quick roadmap for us today. First, we'll look at that crazy 2026 Zcash surge. Then, unpack the math behind zero-knowledge proofs. After that, we'll compare Zcash's philosophy with its biggest rival, Monero, before diving into the counterfeiting vulnerability crisis. Finally, we'll wrap up by looking at the future of Zcash. Simple enough, right? Let's get to it. Starting with Section 1, the 2026 Zcash surge. Now, for a couple of years, privacy coins were basically written off by mainstream commentators. The regulatory crackdowns were just too heavy. But early 2026, it completely flipped that narrative on its head.
Get a load of this. In May 2026, Zcash experienced a massive, totally logic-defying 70% single-day surge. That pushed its overall market cap over the $6.9 billion mark. And this wasn't just some random retail pump. Actually, scratch that, it was the exact opposite. Daily trading volume eclipsed $770 million. We're talking over 11% of the entire market cap changing hands in a single day. If you care about where digital finance is heading, this kind of institutional repositioning is a huge signal you just can't ignore. But what exactly lit the fuse here?
Well, this surge was really fueled by a perfect storm of regulatory breakthroughs. In January 2026, the Zcash Foundation announced the SEC had officially dropped its long-running investigation with zero enforcement action. I mean, that was a monumental green light. Following that, several major Asian and Middle Eastern exchanges quietly relisted the ZEC token. And underneath all of this was the foundational work from 2024 and 2025, where Tier 1 custodians, guys like Coinbase and BitGo, finally built the infrastructure to support shielded balances for their institutional clients.
So let's move to Section 2 and see how this builds. Because to understand why institutions suddenly got so comfortable with this asset, you really have to understand the math behind the magic.
Zcash is built entirely around something called zero-knowledge proofs, or more specifically, zk-SNARKs. Now, looking right at the Zcash Foundation's own documentation, they define this as a cryptographic method, allowing one party to prove to a verifier that a statement is true, without revealing any information beyond the truth of the statement itself. In financial terms, it means you can prove you have the funds and spent them correctly without revealing your balance, your address, or even who you're sending the money to. It's kind of mind-blowing.
If that sounds like impossible magic, let's use the classic colorblind ball analogy to make the abstract math a bit more tangible. Imagine you have a colorblind friend, and you have two balls of different colors. You, the prover, claim they're different colors. Your colorblind friend, the verifier, hides the balls behind their back, shuffles them, and presents one. You can correctly identify whether they switch the balls or not. After enough rounds of you getting it right every single time, your friend is statistically convinced you can see the colors, without you ever having to reveal which ball is red and which is green. That is a zero-knowledge proof in action.
What's really interesting about this slide is how Zcash actually implements this tech. They give users a choice between two types of addresses. First, you have transparent addresses, or T addresses, which behave exactly like the public Bitcoin ledger. Anyone can see the sender, receiver, and amount. But then, you have shielded addresses, or Z addresses, which use those zk-SNARKs we just talked about to fully encrypt the transaction on the blockchain. The ledger just records that a mathematically valid transaction happened. And that's it, nothing else. Moving on to Section 3, Zcash versus Monero. This dual address system Zcash uses is incredibly unique, and it represents a major philosophical divide in the crypto space. Let's see how it stacks up against its biggest competitor.
Neutrally speaking, these two assets represent completely different approaches to privacy. Zcash operates on an optional privacy model. You choose when to shield your funds. Monero, on the other hand, is all about mandatory privacy. Every single Monero transaction uses stealth addresses and ring signatures to enforce opacity for all users by default. There's no public ledger option on Monero. Now, while Monero's mandatory privacy offers incredibly strong anonymity right out of the box, it causes massive compliance headaches, which has led to widespread exchange delistings. Zcash's optional privacy, though, is specifically designed to bridge that compliance gap.
And the tool doing the heavy lifting there is known as a view key.
Zcash's view keys allow users to selectively disclose their shielded transaction details to specific auditors, tax authorities, or compliance officers without making those details public to the whole world. This selective disclosure mechanism? It's exactly what convinced the legal teams at those major regulated exchanges to reinstate ZEC trading pairs in 2026. It satisfies anti-money laundering obligations while still preserving user privacy on the public chain. Best of both worlds, right?
So with the SEC investigation dropped, institutional custody online, and prices absolutely surging, everything looked incredibly bullish for Zcash in early 2026. But it forces us to ask a really critical question. Beneath all that brilliant mathematics, is the Zcash network actually secure?
That brings us to Section 4, the counterfeiting vulnerability crisis. Because just as the protocol was peaking in the market, an absolute nightmare of a software crisis struck. On May 29, 2026, an independent security researcher named Taylor Hornby made a shocking discovery. Using Anthropic's advanced AI model, Claude Opus 4.8, Hornby uncovered a critical counterfeiting vulnerability deep within Zcash's Orchard shielded pool. And guys, this wasn't just a minor glitch. This flaw could have theoretically allowed an attacker to create an unlimited amount of counterfeit ZC, completely undetected, for over 4 years. For anyone relying on decentralized systems for their financial privacy, this is literally the worst-case scenario. As you might expect, the market reaction was swift and brutal. When the Zcash Foundation and the Electric Coin Company publicly disclosed the flaw in early June, which, to be fair, was after they securely deployed an emergency patch, the price cratered. Zcash experienced a massive 38% market crash, tumbling from its recent highs all the way down to an intraday low of $309. Billions of dollars in market capitalization were just wiped out overnight. And this crisis of confidence? It rippled through the top tiers of the crypto industry. Take Arthur Hayes, for example. He's the high-profile co-founder of BitMEX and a veteran crypto investor. Well, he announced he had fully liquidated his ZEC holdings. His reasoning really hit the nail on the head regarding the core paradox of privacy coins. Because those Orchard pool transactions are perfectly shielded, there was no definitive cryptographic way to verify if the bug had ever been exploited in the past. Even though the developers assured the public the supply was intact, the inherent inability to independently verify that fact just drove veteran investors right for the exits.
So, Section 5, the future of Zcash. How in the world does a decentralized privacy network recover from an existential threat to its very ledger? Let's take a look at how the community is attempting to rebuild trust and secure the future of the protocol.
The response from the developers was actually remarkably swift. The bug was discovered on May 29th, and by June 3rd, an emergency patch had already been successfully deployed across the network, with 0 funds lost. But you know, a patch wasn't enough to restore confidence. So by June 8th, Zcash founder Zuko Wilcox proposed a massive new network upgrade called Ironwood. The whole point of Ironwood is to implement a turnstile mechanism, which would finally allow users to independently verify the circulating supply and restore absolute integrity to the network. So the crucial point here is that Zcash isn't just slapping a Band-Aid on a bug. They are accelerating a wildly ambitious technical roadmap. They're rolling out quantum recoverable wallets to protect against future supercomputer attacks. They're actively building the Zcash trailing finality layer, which will transition the network from proof of work to proof of stake by 2027. That's a massive shift that'll eliminate miner cell pressure and make the network energy efficient. On top of that, Network Upgrade 7, also known as Project Tachyon, is aiming to increase shielded transaction speeds by 300%. And finally, the Zcash Shielded Assets proposal could soon allow anyone to issue private tokens directly on the Zcash network. It's a lot.
All of which leaves us with this final, provocative thought to consider. Look, we are living in an era of rapidly expanding global financial surveillance, and the fundamental demand for privacy technology has literally never been higher. Zcash has proven that its zk-SNARKs cryptography is the gold standard. I mean, it's heavily utilized even by Ethereum Layer 2 networks. But trust is a fragile thing. Will the Ironwood technical remedy and the transition to proof of stake be enough to fully restore Zcash's reputation as a secure private asset? It's an unfolding story of incredible resilience, and one we will be watching very, very closely. Thank you so much for joining me on this explainer today, and keep learning.